Good evening, all. Ira Epstein, and yes, I'm back from my vacation. And it is Thursday, the 21st of July, 2022, time 7 p.m. Central Time. And by the way, while I was gone, I was putting these out. My beautiful face wasn't in it. I enjoyed myself by, if you know, Flathead Lake in Montana. My God, is it gorgeous there. And just enjoyed nature, enjoyed everything. Tried to get my throat somewhat better. I heard President Biden has caught this and he's got the cough. Had other friends. I've been getting a lot of you writing me, telling me, oh, I have a friend that now has that. And they also ended up with this cough. This cough lasts 6 to 8 weeks. I went on steroids for it and inhalers, and it's getting better, as you can hear. Not right yet, but I'm now maybe 85%. And for a while there, I couldn't even talk. So where are we? It's pretty simple. For the past 7 to 10 days, the market's been waiting to see what the European Central Bank and the Bank of Japan would do. In a nutshell, the Bank of Japan told Pat, they say if they raise rates, they'll break their economy. They can't afford to do that. The European Central Bank threw in the towel. They are now the Federal Reserve. I know you're going to laugh at me saying that, and I'll be criticized, but it's true. They are now going to be data dependent, not forward guidance, ex ante. And what does that mean? It means that the old days, they're going to guide the market, gone. They're going to look at the data and they're going to react as our Fed does. Nothing wrong with that. They went today, and instead of a 25 basis point hike, they went with 50. Why? Let's get rid of negative interest rates. Now, what they did wrong, in just my humble opinion, and believe me, I'm not as smart as these central bankers by a long shot, not even in their camp. I don't deserve to be in a room with them. But they didn't define how they're going to buy their bonds and what that means. And what that generally means to me with 50 years experience is markets test that. So there's going to be an event soon, not later, soon, where that gets tested. I don't know what the event will be, but we'll see how they start defining what it is. Ms. Lagarde, the chair, the head of the European Central Bank, didn't want to go into it. She didn't want to spill the beans. I get it. She wanted to keep it close to the vest. You know why? They don't know themselves. What did I just say? They don't know themselves. They're going to play it by ear, and there is nothing wrong with that. That makes sense to me. B, instead of putting yourself rigid as the ECB was, we're going to be getting to 2% inflation. We don't know how, but we're going to do it, and we're going to do it with our guidance. Come on, you got to react to the markets. That's what they did. But during the period I've been gone, what have you had? Noise. The markets are just doing this. Do you honestly think that the stock market's bottomed? Well, if you do, there's a growing choir of people with you that say, yes, that's it. It could be. It could be the smallest dip. Certainly wouldn't be a recession if that's the case, because you haven't got the unemployment numbers soaring back up 0.5%. It would have been a dip. I'm not in that camp. I'm in the camp that the Fed is just getting going. And you're all to think on that other way. You have no idea. Federal Reserves don't raise rates like they're doing now, and then suddenly at the end of September go, you know something, we probably have got where we want to be. Show me another event where that happened. Write me. Show me the event. It's not how it goes. They're going to keep raising rates. The question is, can they get a soft landing out of it? Not, is this going to end really quickly? That is not what's going to happen. They're out to break demand, and you're seeing it. Whether you agree with me or not, Ford going to lay off 8,000 white-collar workers. Now, you're going to tell me it's because of electronic vehicles. Okay. You're going to see Starbucks, other companies closing different stores. Okay. I'm sure you're going to tell me it has nothing to do with demand. Okay. You're seeing companies I want to repeat this, not replacing lost workers. Okay. You're seeing the end of a summer. What's going to happen with all these people that are in outdoor jobs in the Midwest, the East Coast? They're going to be laid off. You think they're going to be replaced? Okay. That's what's going to happen. So you're going to get that bump. You're beginning to see it slowly in the jobless claims. You saw them go up today, 7,000. Housing, a disaster in starts and otherwise. And I know your argument, and you're not wrong. Some of the housing companies are certainly looking good because there's so much pent-up demand. But that's going to be for the individual homes, not for these major tracts that go on. There's a way to make money in housing, and it's going to be, how do I put it, more custom housing of people that have the money to do it. And I'm not talking multi-million-dollar homes. The builders, the Toll Brothers, KB, they figure it out. When you take a look at the weekly area of charts, you can see you've been getting a bounce. You are up 3% for the week. In fact, we bottomed about a month ago. We talked about that here before I left. The market has been coming up. You don't need me to show you that we got a bounce, that we came off nearly the 36,000 level, and we've come up 300 points. I love it. That gives the market room to break again in a bear market. When I look at this, we're not in a trend. You have a pattern of a lower low and a higher high. That is not a trend. The market has been, for the past week, over the 18-day average of closes. It fought a battle all through here. I love it. Where's the resistance then? Well, one piece of the resistance is certainly the 100-day average in green. The other is the 200. Can you get there? I didn't say you can't, but I don't think so. I think where the market's got its resistance is right what you're looking at, the upper Bollinger Band. And added to that, you're overbought. So I see a market that I think is sideways. I told you before I left, I thought we'd see sideways action. It resolved to the upside, but hasn't cleared the upper Bollinger Band. You're overbought. You're at the upper Bollinger Band. You might even make it to the 100-day average, but you're not running away from that band. And if the Fed goes with 100 points, you won't even know what's going on as the bottom lets out on you. Same thing in the Dow. No embedded readings, overbought into the key resistance. How often do you stay outside of an upper Bollinger Band? 5% of the time total. Doesn't have to be consecutive. I have better ways to count it than most people, and you're just at that resistance point as I see it, and the same goes for the Russell. So for my money, and I don't have much of it, but for my money, I think you're between the upper Bollinger Band and the 100-day average, looking at a top area. I don't know where it's going to form. Can I get bullish? Not unless you get embedded readings, and you're not doing that at this point. The next thing we're going to look at is the VIX. This will fill in right now. I had mentioned that I thought the pros went short against the lower band in the 100-day average. I still think so. I do not think they're throwing in the towel. Now I'm going to give you an edge. With today's action, you embedded. Embedded doesn't occur a lot in the VIX. When you get it, as you can see, you set up a trend, but when you lose it, you get violent reactions. Again, you had it on the downside. When you lost it right here, you get that violent reaction. You embedded today. When you lose it, I think that this is where the pros will come out. We'll see if I'm right or wrong. Now, where am I wrong? If the market takes off and just keeps going up, I'm very wrong in my thinking. But before I did this, I looked real hard at the weekly charts, which I'll show you over the weekend. My argument holds up on the weekly charts. In the 30-year bond, you've got to be saying to yourself, why are we rallying if the Fed's going to raise all these rates? Because the higher you go in futures, the lower the real rate, and it has to do with the curve yield. The market's convinced that if the Fed goes too much, too far, the economy weakens, and that's seen in the 30-year, in the 10-year, because there won't be the demand for the long-term money. Not at these rates. They'd have to come down. Business will say, I can't afford that, I can't pay that, and do this project. You're going to hear that over and over. When you get to the 10-year, you can see you're just fighting right here. And if you go to the 5-year, you're at a bear market, actually. In the dollar index, I love it. You finally got a correction. You had been riding the Bollinger Band since the beginning of July all the way up here. When you lost the reading, come on, I know what I was telling you. I was with you. And we were talking, would this market at that point, and we can come back right here. Watch right here as the market loses the embedded reading. Remember what I said, momentum leads price? This is screaming to me. I don't know about you. I know what it's telling me, that price and the 18-day average are going to hit each other. And then I start looking to see, well, what does that possibly mean? Can't believe it. There's July 20th yesterday, and this is where you're at. It's game fresh. You're just at the beginning of what's ever going to happen. Now, the market doesn't like what the Fed does. We should get under 106.23, and in theory, maybe you get to wherever the Bollinger Band is. Okay, I can see that. Why? Because that would get me, initially the market might say, the Fed is getting too aggressive. They're going to break the economy with this interest rate hike. And people would do that. I understand the thinking, and I'm not arguing it. In the euro, once you lost the embedded reading, and I won't do it here, but right there, you were going back to the 18-day average. Why did the market just stop at that red line? Let me explain it to you. It's called the line in the sand. I discovered 30 years ago that markets and moving averages, and I had the greatest teachers, I think, ever at the CME and the Board of Trade. The markets like to get to neutral numbers. People used to buy services that would optimize moving averages. I found it was a waste of money. I found that for me, my style, the 18-day average fits very well. Do I care if the market's going to get a point or two over that? Why? For the day traders in the pits, it's before electronics, that was a crucial number. They had to have it optimized, and I saw how they did it. I learned from it. But then I realized with electronics, things smooth out. This is the line in the sand. When the market's over it, you should have a bullish bias. But when you're rallying up to it, it's a natural resistance point. That's what the market did. And if you think the day traders weren't looking at that, I was in the pits, I traded, and you'd have your cards, you're doing it, but I had my moving averages, and you'd look at what it was. I hated trading on the floor. I kept a very short career there. I found that I couldn't stand that I wanted to buy my 1 to 5 cars and the guy next to me selling 100, and I go, what the hell's wrong with me? And it was like bluff poker. Get me off the floor, and I felt very comfortable. There are no more floors, so don't worry about it. Same thing, British pound. All you did is rally to neutral here. Bitcoin. Once the market started drifting around here and you lost the embedded reading, we went sideways. I still think you're very much sideways. I don't think there's been a decision on what the next move is in that market. Brent versus WTI. Well, when I left, you were over here in the 598 level. You've added to that right on through. And when you look at energy, you tell me you don't see the combination of the 100 and the 18-day average. Very strong. That's your resistance point. To get bullish here, you need to clear 107.60. That opens the door to the 114. I don't think that'll happen soon. I think you get there in the fall when we realize Europe doesn't have enough energy and price going to be anything. Do you honestly think that President Putin doesn't realize that? He's got more wild cards than you can imagine. He controls the supply in the world today of oil and, believe it or not, wheat. It's up to him to decide, does the Ukraine wheat move out? If not, he'll take his and theirs, and that's the major wheat of the world. Now, another thing you got to start thinking about, when I went away, I started thinking, what if Russia and Ukraine end up like North and South Korea? Permanent battle for the rest of our lives, different philosophies, curtains, they get along, they don't get along, they try to set up trade points, they can't get them done. I think this is where you're headed. Look at that model, you tell me, and study it. That could be it, and then you got to figure out trade off that model. WTI, all you did is rally back to the resistance. This next leg of the bull, in my opinion, is not ready to go until we're further along out of the summer and we start going, what about energy needs for winter? That's when I think this market starts going bananas. Gasoline, remember what I told you. As I was in Montana, I'm watching them drop fuel price in that 10-day period I'm there. I think it was 5 cents. Sudden one day, of course, I filled up wrong. It was 474.9. I remember it. In the next 2-3 hours, it was 469.9. I wanted to get my money back. They wouldn't give it to me. But away you go on that. Okay, you got to get over this 322, 323 area. on a closing basis to get friendly again. Right now it's in the bear camp. Nat gas, you don't want to get bearish. So I studied the Freeport LNG terminal in Texas. What if I tell you, since it blew up a month ago, they still don't have any permits to begin construction? There's a commission that runs it. They don't like what they've been told. They don't like the methane, how it's leaking out of there, any of their methods. So for us, it's a benefit. For Europe, it's a nightmare. Why? It means we have 16% more natural gas than we would. That's how much the terminal sent of American natural gas for export out. That was bearish. So why are we going up? Let me explain this. Have you walked outside? It's 90 in Chicago right now, 114 in parts of Oklahoma, 110 in parts of Texas, moving across the country. What did I tell you? You don't want to be short the